Hello, this is Will from Will to Trade. You can check me out at willtotrade.com. Fill out the form, get invited for a 2 free-week trial to our chat room. I did want to talk about a stock that we alerted today a couple times, made some money on, and a stock that made some huge gains today. It's AKAO. I want to give a market recap video on this stock because it made such incredible moves, and there's really great patterns that this stock went through today, and I wanted to kind of showcase how you would spot them, how you would trade them, how we alerted it, and how you could trade this ideally if you really understand these support and resistance lines. So I talked in previous videos on the 3 steps to making money trading. Very simple, very straightforward. Step 1, you got to know what stocks to trade. Step 2, you got to know where to buy. Step 3, you got to know where to sell. So very, very simple, very, very basic. If you can master those steps, you can definitely make money trading. So step 1, we all knew that AKAO was a potential stock to trade today. It was on pretty much all of our gap scanners as a stock that was gapping up. It had some really good news, some phase 3 results. So there was a lot of activity pre-market. And as you can see, the activity is all over the place. So first thing you would want to do is you would want to look at the pre-market, and you would say to yourself, yeah, this could be a stock that I would trade today. So if I wanted to trade it, where would be a place I would want to get in? Initially, one of our members was thinking 740, which is, a great answer. Initially, I was thinking 840, which is okay. But in retrospect, after looking at the chart, the pre-market activity, I would actually say that $7.80 would have been the absolute perfect entry point. I'm going to draw that line here on the chart so you can see it, 780. So hopefully it'll make some sense. And here is where pre-market can be really interesting. And I guess just, market in general can be really interesting. There's some different ideas that say if you want to trade a stock for an opening range, breakout, trade, etc., buy at the high of the pre-market or buy just above the high of the pre-market. And sometimes the charts work out perfectly for that pattern to happen. And, here would be the high of the pre-market. I guess you could say 891, or maybe down here at the 830 level. And you could say, yeah, I'll buy at 830 or 831, or I'll buy at, 891 or 892 or something like that. And those would be fine answers. Those would be, certainly places where you could buy. But what I've personally found more times than not is that it's not I'm looking for a point of resistance, right? I'm looking for a point of resistance during the pre-market. And what I've found more times than not is it's not exactly that I need to find the absolute high of the pre-market. I just need to find a point of resistance that's consistent for the pre-market where most of the candles are below it, and specifically in the first half hour before the market opens. So this here would be the first half hour before the market opens. And notice the top of this stem, the top of this entire candle, all these candles here before the market opens are below 780. So it, very, very early in the morning, it pushed way up above 780, and a little bit over here, it's pushing up above 780. But right before the market is opening, which I find to be more critical, more relevant, there's, I think, a very clear, very defined point of resistance at $7.80. So again, these are 5-minute candles in the 5-minute view. Here's our very first candle of the day. As you can tell, obviously it's a red candle, and obviously there's a decent sell-off in the first 5 minutes at least of the market. So you'd be thinking, okay, well, there's a sell-off. What's going on? And I thought it was gapping up. I thought I would get in. I love the entry of 780 here in retrospect, because this 780 line, not only is it above these previous candles' point of resistance, but it's above the very first 5-minute candle. So in retrospect, I would have loved to have an order at 780, and then if the stock flushed down, then my order would never get filled. I would never be in the trade. But if the candles turned around at 780, then of course I would find it a point of strength and a great place to buy in. So we'll fast forward to the next 5-minute candle, and sure enough, it pushes through 780. So this is a great place where you could jump into the trade, and then you would wait for the next candle, And the next candle is obviously green again, pushes up more, but we do have a little bit of a wick here up top. So because we have a little bit of a wick, this can be a selling signal. So I would be interested in selling, in this first push. Maybe somewhere in the 860 or the 858 range. Again, it's not an absolute. It doesn't mean you have to sell exactly here, exactly there. This just happens to be a 10% move. You don't have to go for a 10% move. You could go for a 5% move. You could sell at 860. You could sell at 858. You could sell at 840. You could sell at 820. You could even sell at $8. As long as you're selling above where you bought it, you're making profit, right? And I think specifically, if you can see a wick, especially on a 5-minute view, it's an indication that at least at this very moment in time, the buying activity is pushing down, at least for this very moment. Obviously, later in the day, there's a lot more buying. So let's fast forward to the next candle and see what would happen. Now, this candle, again, fascinatingly enough, the top of this stem here and the top of this stem are almost exactly in place at 845. So I find this really interesting. But look at this pattern, learn this pattern. You're going to see this over and over and over when trading. It ramps up, it either pulls back or it levels off, and then one of two things is going to happen. It's either going to flush all the way down again, or it's going to continue to the right and it's going to continue to go up. So I would say your second trade really could even be this exact same place where you sold, the 858, 860, or it could be just above this red candle here, right? So this red candle here, the top of it is 849. So you literally could draw another line at as low as 850. And I would say, basically from 850 to 860, right, becomes a good range, not an absolute. And sure enough, there's your opportunity to jump in again, and the candle pushes up. Okay, we have a very strong candle here, so we would want to continue to hold. Now we have a wick. So this is our push, and then our sell is somewhere in this wick here up top. Again, not an absolute, but somewhere up in here. So we'll go ahead and draw a line here at 910. So basically, you have an opportunity for one trade, wait for a little bit of a pullback, or even a consolidation, if you will, and then you have a place for a push for a second trade. Now, the best thing to do at this point is wait. If you weren't able to sell in this first 5-minute green candle, you have basically 2 more candles where you could sell. And notice these wicks here. This is telling you, again, at least at this moment in time, that it's really time to sell. It's not too bullish right now. But the third candle, is red and then green and then red again, and then this one pulls all the way back to this buying zone, right? Which was once a place to sell, now is a place to buy, and here's your place to sell, and now you're right back to the buying zone again. You either could buy right in here at this buying zone if you really wanted to, which would represent like a Groundhog Day trade, which I had mentioned in some previous videos. You certainly could. Or what you could do is you could wait for the turnaround. Again, this pattern is a famous pattern as well. Basically, a stock that ramps up really strong and then pulls back to this level here where you would buy a second time, and then the candles are either going to flush all the way down, or they're going to turn around and test the previous highs and then possibly even ramp up more. Some traders like to, it's called the red to green move. Some traders like to wait for 1-minute candles, or the first green candle to make a new high they would want to buy. I personally like to look at the 5-minute as the day's going on, and I like to look not for the first but for the second 5-minute green candle after a flush out, after a ramp up. So ramp up, flush out, and then wait for a turnaround. And then there's our first 5-minute green candle, and there's our second. So basically anywhere in here, but more specifically this candle is what I would personally say would be a buying candle. If you're really aggressive, you could buy as low as here, or you could buy up in here. So I will make this like an 880 line, and we'll even make this like a purple one here. And then, or you could say above these stems here, right? So you can visually see if I'm up in here, let's say like 891, again in this purple area, then basically in this candle, anywhere in here I could buy. Now, here is just an idea, okay? Just an idea. Take it, leave it, whatever you want. If you were following this pattern, and if you were zeroed in on this stock and pretty much this stock only today, and you were able to capitalize on one trade, two trades, and then you're in on a third trade, I would say an idea is wait for the candles to move up, and they do. Wait again, and they do. And then move a stop to literally break even. Let's just say you're lucky enough to buy in at 880. Move your stop to 880. If you're really lucky and you're able to buy all the way down here at 851, move your stop to 851. Normally on your first trade, I wouldn't say just move your stop to break even. I would say grab some profits. And same on the second trade. But if you made one trade, two trades that are both successful, you're already green on the day, you're already green on this ticker, you're basically playing with the house money. At this point, you know that the stock moved up once, it moved up twice, now it's moved up a third time. It's possible you might want to consider an all-day hold. It's possible you might want to consider, let's just hold this as long as we can. Let's just see what happens. And if you're wrong, right, if the stock turns all the way back down, let's say you buy right here at 880, it goes up, you don't take any profits, and it comes all the way crashing down. Just as an idea, I think that that's okay. Not on your first trade, not on your second trade, but on your third trade, I think it's okay, right? So we can fast forward, and obviously, you know, we can see that this stock did make a huge move, right? Obviously it did. Now, if you bought in this purple zone here, you literally could sell anywhere you want, right? You could literally sell in this first push. You could wait for a second push, a third push, a fourth push, a fifth push, a sixth push, or a seventh push. At this point, it's all house profit. There's really no right or wrong answer. If you wanted to hold all day, you could hold all day long until, you know, $13 marker. You're not going to know it's going to go to $13. You know, maybe you're thinking, you know, if you're buying in at 880, you know, maybe you're looking for a break of $10. Hey, you sell at $10, that's still a nice gain. Maybe you want to wait for $12. You just, you know, hoping to get 12. It hits 12. You know, you certainly could sell. There are ways that you could jump in, jump out in these moves here. And again, my idea is not an absolute. Doesn't mean you have to do it, but it's just an idea and a suggestion. If you are green on a ticker on not one but two trades, and you take a third trade and the candles move, you know, why not? Why not roll the dice? Because if you're wrong and it flushes down, worst case is you break even. You don't make anything, but you don't lose anything either. I did alert in the room, and I want to go over this for members in the room. I want to be really specific because I can be way more detailed here in these videos than I can in information that I'm chatting about in the room. I did alert this as a possible overnight hold, and I was saying specifically that I was looking for that break above 1351 because, as you can see here, 1350 was the high. I felt that if it had pushed to 1351, it could have the potential to continue to run. And if it did, it could have the potential to gap up tomorrow and just keep running, you know, running into the 20s or maybe even hit $30. I did think that at the time. That was before, obviously, there was news that the company sold 5.75 million shares in a public offering. So obviously I didn't know that. But that's why I was trying to be specific about the 1351 line. So, you know, buying and selling or trading during after hours and pre-market can be very tricky. I don't recommend it unless you're able to actually make those trades during the after hours. If your broker prevents you from trading during after hours, then I would suggest don't trade during after hours. But if you're able to trade during after hours, then I would suggest this would have been a great overnight hold to buy at 1351. Unfortunately, the stock did flush once after hours hit. It obviously never hit 1351. If the news did not come out, I think the stock would have easily hit 1351 and continued to push on. And I think this would have been another great buying opportunity. So I wanted to be really specific about that in the video. So I hope this video made sense. I hope you guys were able to trade AKAO and make some nice profits on it today. If you liked the video, go ahead and give it a thumbs up. If you love the video, go ahead and hit subscribe. And if you're interested in our room, just go to willtotrade.com, fill out the form, and we'll get you all taken care of. Thank you so much, and have a great day.